And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu, taking you through to that closing bell with the global simulcast. We're joined right now by Carol Massar and Tim Stenovec in the radio booth. Katie Greifeld has the day off. Welcome to our audiences across all of our Bloomberg platforms. That includes our partnership with YouTube for you two giggly Gus's over there in the radio booth. What's so funny?
We're trying to figure out, we're playing planes, trains, and automobiles over here. We're trying to figure out.
The locomotives on the Amtrak and Acela, are some of them diesel? Because I think
and some are electric. That's the conversation we were just having.
Because we're trying to figure out, we have to take a trip. Yeah. I'm just going to say.
Nobody else is interested in this.
We have to go to Boston, and it's like, do you get on a plane?
Oh, this has been your debate all day.
It's been several days, actually. And
I think we're going with the
just
train.
Pretty depressing.
Yeah. Okay,
all
fascinating.
Right. All right, well, maybe we'll have.
Yeah.
All right, listen, the enthusiasm for the shutdown, I got to say we felt it a little bit yesterday, but not feeling it today.
In terms of the trade, well, the Dow's surging a little bit. The S&P 500
I thought we
up
liked
right
the
now.
Dow.
The Nasdaq Composite under pressure. Nvidia really weighing on these indices. Scarlett.
Well, you know, I mean, we might actually get the government reopened by Friday. Henrietta Treisaveta was saying that she thinks that the bill will be passed and signed by President Trump on Thursday, which means we could get a stream of data coming out on Friday and at least, you know, things moving in the right direction by then.
But I'm curious about some of the labor market data. I mean, the ADP data, which seems to suggest that we're actually seeing a contraction on the labor market. And of course, some of the individual layoff notices that we've seen from some of the companies. I don't know. I mean, what is that telling us?
I don't know. I'm counting down to Nvidia earnings next week. I want to see what's going on with this AI trade. I want to hear from them, guys.
Yeah. Just also, too, just a quick reminder to just give everyone an update here on some of that airline chaos today. A much better day than what we've seen over the past four. In fact, Sean Duffy, the transportation secretary, speaking right now, talking about that cancellations right now tracking at around 1,700. That's below the 2,000 to 3,000 that we saw over the past few days. Take a look at the chart there on your screen. An S&P 500 in the green, but only by about 0.2%. There was a big drag down because of Nvidia's drop. You saw that particularly reflected in the NASDAQ composite, which is down about 1/4 percentage point. The Dow Jones Industrial Average, though, up 600 points, 1.2%. That's actually a record high, 47.92 and change for the Dow Jones Industrial Average. Saw healthcare stocks, FedEx, and quite a few others moving higher on the day. And the Russell 2000 squeaking out a modest gain on the day, up 0.1%.
Which makes me wonder, like, what does that tell us? I don't even know. Kind of wild. S&P 500, let's go back there, guys. 343 names gaining on this Tuesday. Scarlet, 158 to the downside, 2 unchanged.
Yeah, let's focus on the market cap weighted index, which is the S&P 500, rather than the price weighted index, which is the Dow. So within the S&P 500, there's only one sector in the red. It happens to be the most heaviest weighted sector, which is tech, down 0.75%. But everything else finished in the green, although industrials and utilities, little change on the day. The best performers, to what Romaine was saying, was healthcare, up more than 2%. Energy and consumer staples also gaining at least 1.2%.
All right, a lot of green on that screen. All right, let's go to individual gainers, if I may. This one was pretty much top gainer in the S&P for most of the day, but here at the close, being edged out a little bit. So it's in the number 2 spot here. We're talking about Paramount Skydance. This stock up as much as 12.5%. Intraday, but closing just shy of 10%. Company rose after it raised its target for job cuts and cost-saving measures. Company planning an additional workforce reduction, aiming to achieve at least $3 billion in cost savings. It is, though, forecasting $30 billion in revenue next year and plans to invest much of that savings in the business, including $1.5 billion in additional 2026 spending for the Paramount Plus streaming service. So definitely some outperformance in that one. Check out the Real, guys, up 38%, pretty much finishing at its best levels of the session. The company out reported EPS and sales above estimates. It also boosted its revenue guidance for the full year to beat the average analyst estimate. It's up about 40% year to date, but keep in mind probably some short covering today, as 25% of the float is short. So we definitely saw investors moving into that one. And last but not least, Maple Bear. I can never say that word. Maple Bear. Maybe I should just say Instacart.
There you go.
Ticker is CART. Stock up 5% in today's session. Company posted better than expected order growth, provided an upbeat earnings outlook for the current period, indicating that demand for its core grocery delivery service has been holding strong. And we've seen that for some of the companies, Uber Tech and DoorDash. They have also seen some expansion beyond restaurant takeout into the grocery category. So we're kind of seeing and all in on that.
Okay, well, let's talk a little about some of the stocks in the red today. Decliners on my list included Nvidia, down 3%. Those shares took a hit after SoftBank sold its entire stake in the company for $5.83 billion to help bankroll AI investments. This sale coinciding with a growing debate about whether spending in big tech firms will actually produce commensurate returns, expected spending surpassing $1 trillion in the coming years. I get it. They think they can have a better return outside of the company, and maybe that got some investors in the company concerned about Nvidia today. Shares sliding by 3%, weighing on the S&P 500, responsible for actually 16.8 points to the downside of the S&P today. CoreWeave down 16.3%. It fell the most since August. This after the company lowered its annual revenue forecast. This was due to a delay in fulfilling a customer contract that was caused by a third-party data center developer who is behind schedule. The company's CEO, Michael Intrater, was on Bloomberg Technology earlier today. He did say that it's a trusted partner and trusted customer, and they still have the contract. But these are the types of delays that they are dealing with. These are the choke points that the company is dealing with. That forecast for sales in 2025 now $5.05 billion to $5.15 billion, down from a previous high of $5.35 billion. CoreWeave shares down 16.3%. And then Beyond Meat fell today 9.3%. The company's fourth quarter net revenue forecast missed the average analyst estimate. The company sees net revenue in the quarter 60 to 65 million. The Bloomberg consensus was $70.1 million.
All right, let's get to some stories on our radar. And this one we've been talking about a lot. Walgreens cutting pay for hourly workers, no longer giving many of its retail workers paid vacation time for Thanksgiving, Christmas, and some other major holidays as the company looks, to cut costs.
That's very grinchy.
For what?
I don't understand this. And I feel like when we talk about the K-shaped economy, people have come on and said, well, part of it is we've got to get companies to pay workers a living wage or more.
I don't know. I understand it. I think it's a labor market story. It speaks to the fact that now it's easier to get these employees so they don't have to make the same offerings that they were making during the pandemic. It's also a private equity story.
There you go.
Okay, thank you. You
now
get to the heart of it.
Private equity-owned company, and
but
looking to cut
you do
costs.
realize these are kind of people in the business of customer service, and if they're not feeling good about themselves and their lot in life, are they going to treat me with a smile?
Probably not.
Can apply that to air traffic controllers.
And for that matter, not to bang up on private equity, but we've seen this playbook before, where they buy some of these consumer products companies, or consumer-facing companies. They start cutting costs, the employees get disgruntled, people stop going to the stores, and then what?
The cash flow slows down.
Okay, seems short-sighted on me, but.
It just seems kind of rough. All right, what do you guys got for us?
You guys know about how Visa and MasterCard finally settled this 20-year litigation with retailers. And as a result, they've agreed to loosen their honor all cards policies. And what that means is if you have a Chase Sapphire card, one of those MasterCard World Elite cards, you might see your card rejected by a retailer next time you go in and try to pay for it that way.
So I'm very confused by this. So basically what they're saying is that some of these premium cards also, they charge more to the retailer for transaction costs.
Yes.
So they can just say, okay, we're not going to take Chase Sapphire, but we'll take, something lesser than that. But how do you know? It's like most people don't have 15 credit cards, Scarlett. Most people have,
have
2, maybe 3. So it's like, what? Are you just not going to buy anything?
But is there a setting on the point of sale that allows or denies a certain type of credit card? So if somebody pulls out their phone or does a tap to pay, the card is not accepted because, well, they have a setting that says we're not going to accept this.
The infrastructure needs to be sorted out. The technology needs to be sorted out. And of course, this needs to be finalized, but the proposed deal could allow retailers to stop accepting certain types of credit cards. And we already see this with, if you go to the pizzeria, for instance, or the dry cleaner, they might say, oh, you're paying with credit card, then, I'm going to have to charge you an extra surcharge. Or in my case, they'll say, I'll give you a discount if you pay in cash.
Well, that's fine, but that's kind of across the board. But when you start saying, okay, we're only taking certain brands of cards or certain sort of brands of brands, it's like, I'm supposed to keep track of that.
That's
and they're doing it on the premium cards, which are presumably more higher income individuals. It seems kind of odd that you would sort of, peeve them.
That's what I was thinking. The premium cards, right, that are, they have higher fees and, charging individual customers. You get all these benefits, but you pay more for it.
This is ridiculous. This is exactly why I'm just going back to cash.
Well, look,
roll of quarters in the pocket, a wad of bills in the sock, just old school.
I think
it's like my grandfather. when he died, I found like $100,000.
I don't want to be the Walgreens cashier who encounters Romaine and his roll of quarters.
Did you say $100,000 under?
Yeah, he didn't trust banks.
Okay.
He came from a different time and place.
Sometimes that different time feels better. All right, guys, that's a wrap, right? Our cross-platform coverage, radio, TV.
If you ever wonder why some people just buy a cabin in the woods and write manifestos, I think these two stories we had today are exactly why.